Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting this evening. As we get started, a couple things to keep in mind. One is that when you trade, obviously there's risk of loss with each and every trade that you take. No one trade is guaranteed to profit. I think we all understand that. The flip side of that is there are some nice potential profits with each and every trade that you take as well. Just keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational standpoint within the webinars. Now, in terms of risk and risk management, we'll go over some ideas and some ways that our web trader platform, as well as our AvaTrade Go mobile app, can assist. Now, before we go any further, I just want to do a quick systems check. If you would, type OK if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues, feel free to let me know. For anyone who's new to trading, I think a lot of the traders in my webinars have some experience, but if you're brand new to trading, some basics before we get on the live charts and start looking at some strategy concepts involving fundamental analysis. What is fundamental analysis? Basically, it's looking at the news, the topics that are trending, either with economic announcements, regularly scheduled events like the release of jobs data and that sort of thing, or also headlines that might be what we refer to as extraordinary economic events, such as headlines about currently the major story is the war in Ukraine, between Ukraine and Russia, and in the past, it was the pandemic, and before that, it was Brexit. These are extraordinary type economic or fundamental news events that affect the economy in one way or another. And those types of headlines are harder to predict in terms of scope and timing, but certainly we can have strategy ideas that are able to potentially take advantage of those sorts of economic affecting headlines, economy affecting headlines. And so we'll move forward with some ideas regarding both types of fundamental news and how to work strategies around it as we look at the charts and maybe work out the technical analysis along with it. Now, an easy way to do fundamental analysis is to do a quick review of the major headlines to get a feel for which way is the wind blowing. And so an easy way to do that is go to some of your favorite news sources, wherever that might be, and we can see headlines like Wall Street falls on fears of hawkish Fed, fresh Russia sanctions. So two things driving some of the fear that's been out there today. And so let's kind of break down what that headline is saying. Fears of hawkish Fed. Some terms there that maybe you aren't familiar with. Hawkish is the opposite of dovish, and hawkish means aggressive in terms of approach, and dovish means maybe kind of weak in terms of approach. And when they're talking about the Fed, they're talking about the Feds in the US, the FOMC committee, the folks in the US that are going to make monetary policy decisions moving forward. And the talk has already been there this year about being aggressive with interest rate increases. And there was more talk about that today. And so that's raising fears that interest rates will go up quickly in the US multiple times this year, has basically been mentioned, maybe at each FOMC meeting this year, 5, 6, maybe interest rate increases, quarter of a point, half a point each time maybe. And so why does that create fear on the markets? Well, it was nice for Wall Street to have very low interest rates. Businesses love low interest rates. They love stimulus being thrown into the economy, which is what has been going on through the pandemic. And so Wall Street, even through the pandemic, was reaching all-time highs. And not just Wall Street, but markets all around the world, in Europe, UK, etc. And so as the pandemic is kind of less of an event and more and more folks are vaccinated, and the fear of, catastrophic health consequences from the COVID virus are kind of lessened, then economies are opening back up, and governments are seeing the need maybe less and less for these ultra low interest rates and all of these stimulus measures that were there for the past couple of years. And so as you increase interest rates, what that does is increase the cost of borrowing money. And so if you're running a business, you want to borrow money, expand the business, etc., it becomes more expensive to do so if interest rates are higher from the banks. And so increased interest rates are causing some fear on the riskier, what we would call growth stocks in large part. And so the NASDAQ being one that has what we call all these tech stocks that have rapid growth, and they've had that through the pandemic. You see those pulled back the most, the NASDAQ. But the others followed, the other sectors, but the NASDAQ pulled back the most because they have the stocks that went up the fastest as well through the pandemic. Now, on top of that, then the fear of a hawkish Fed, then we also have fears of what might happen to fuel supplies, oil supplies, coal supplies, etc., natural gas supply out of Russia specifically, as the European Union and the US push to raise even more sanctions on Russia. And so that fear could drive up energy costs, and if that drives up energy costs, at the same time the interest rates could be going up, which is another increase in cost. Well, you can see why businesses wouldn't like that, why stock prices might drop when there's fear of increased energy costs at the same time as maybe interest rates going up to, and why are the interest rates going to be risen up maybe in some areas around the world? It's not just that the economies have been doing well, so there's a view that there's no need for these low interest rates anymore. It's more than that. It's because there's been so much inflation of prices that we have what we would call hyperinflation in many areas of the world, and largely in the US. This is driving the interest rate increases, not as much in the European Union. There's less of a fear of the hyperinflation, at least for now. And so what we're looking at then are two strong reasons for the fear today. And then we look over here and we can confirm that. Everything's in the red in terms of the futures and the markets when they opened in the US. The US indices are all in the red, the tech sector more heavily. And then we see the only things green are those that indicate fear. The VIX volatility or fear index is up nearly 8%. It's been up all day. And the dollar index, which is the US dollar paired against a basket of other currencies, also up pretty strongly today. And that's a sign that folks are rushing to the US dollar as somewhat of a safe haven. And so you might say, well, I thought gold was the safe haven. Well, gold is the safe haven when there's fears of high inflation. When there's the opposite, fear of economic slowdown because oil prices are too high, or fears of increased interest rates going up, which tends to strengthen currencies, then you might see actually gold sell off with that kind of fear. So yeah, gold goes up with fear, but not with all types of fear. With fear of increasing inflation, gold tends to go up. With fear that measures are going to be taken to stop the inflation or slow it down, then gold might actually come down as the US dollar strengthens. So interesting situation here with these factors driving the market today, and pretty predictable all day long. For that matter, had you looked, those headlines were there all day. So you could have been trading on the movements that have been occurring throughout the day with understanding which way the wind maybe was blowing before you started trading. Okay. Oil dips as coronavirus worries offset more Russia sanctions. That could be an opportunity, by the way. This headline's outlining that, okay, more Russia sanctions are coming maybe, which then could create more fear about supply of crude oil. But because of coronavirus worries, oil actually dipped. rather than going up with the Russia sanctions fear. So we could look at the chart and see if there's an opportunistic dip, that if you're bullish on oil in the bigger picture because of the war situation, and also because the economies are roaring so much with so much inflation, maybe that's an opportunity if oil dipped. You've got basically as headlines giving you opposite factors. Oil dipping because of coronavirus worries, but that offset the rise in oil that was being caused by Russia sanctions fear. I think the coronavirus worries may fade quicker than the Russia sanctions fears. That's just my opinion. Okay, so we can also look at the economic schedule. Remember, we said there's two different types of fundamental news. We just got done looking at the headline kind, the kind that comes out that you don't know for sure what they'll be, but there they are. And now we're looking at the other type of fundamental news, which is the scheduled kind, that tells you exactly what was expected, what came out, for what area of the world it should affect, what currency should it affect, etc. So these were scheduled for today. And again, we see in many areas numbers coming in higher than expected. Again, this is a sign of an economy that is roaring, but at the same time, it's an impetus for hyperinflation. So usually when these numbers are in the green, you say, oh, that's great news, but not when there's fears of hyperinflation. So we see the Purchasing Managers Index. Again, the numbers coming in higher than expected. Anything above 50 shows industry expansion. And here the expansion was higher than expected once again out of the European Union and out of the UK. Much higher. I mean, above 50 is expansion. The expected number was 59.7. It's not usually expected to be that high in maybe normal circumstances. And it came in even above that at 60.9 out of the UK. Okay, Composite Pmi. So these PMI numbers, Purchasing Manager Index numbers, are a sign that, wow, there's still a lot of demand in the economy. This is what's driving up prices so fast. So this creates fear that measures have to be taken to slow the inflation down. Will that mean increased interest rates, decreased stimulus measures in the US? They're talking about cutting back on the bond buying program, increasing interest rates, the reverse of stimulus, to try and slow down the economy, to slow down the price increases. Well, of course, that creates some fear because prices are high, and now you're going to do something to make it more expensive for people to borrow money. And so that creates fear and actually could cause some bearish pressure on the economy, at least in the short term. And so that's the situation we find ourselves before we look at the charts. So I think we might all agree that those headlines, that quick 10-minute review, kind of give us a little bit of a gloomy feel. Maybe there's bearish pressure today. There's some negative sentiment today. And so we want to take a look at the charts with that in mind. And many times that can be the difference when you choose which entry points that look opportunistic but go in the direction that you think the wind is blowing, as opposed to entry points that look opportunistic but are going against the way the wind is blowing. That can be the difference, knowing which ones you prefer to take. Even if on the technical analysis they look similar, one's going with the direction you think things should go and one is going the opposite. That many times can be the difference. That selective nature of which trades you should take and not take, that can be the difference many times between profiting that day and not, or profiting that week or not, etc. Now, what we can do is take a quick look at the mobile app. If you don't have the AvaTrade Go mobile app, I would suggest that you check it out. You can trade on the MT4 and MT5 accounts, switch between all of your accounts right here from the mobile app. And then also our web trader platform has all the same features, and you also can trade on the MT4 and MT5 accounts from there. So real quick, let's go through some things that can help us out with some strategies right now. So we understand maybe the sentiment of what's going on in the markets. Tech stocks most heavily affected, some fear in the markets. Now we can look for some advanced tools within the app and within the web trader. For example, I can go to Market Buzz and it gives me fundamental news on stocks. So I already understand the sentiment today. Now I'm going to take a look at some articles on trending stocks right now. And I think we probably all understand why Twitter and Tesla are at the top. Okay, big time news came out recently. Elon Musk bought a huge stake in Twitter, and that's kind of shaking things up a bit in Twitterverse. And so it's trending like crazy. All right. And so looking at the chart, looking at the stock, how it's moving could make sense to you. And this is a time saver that you can click on just this link here, and it will bring up the most recent articles for you. So if I tap on Twitter, it will load the most recent articles by the minute, by the second, coming out of the internet from all kinds of sources found for you. So you'll see these are time-stamped. This article's from 45 minutes ago. There's one from 54 minutes ago, another one from 54 minutes ago, all about what's going on with Elon Musk joining the board. So they appointed him to the board now, and he has a lot of ideas about free speech and not blocking people so quickly from Twitter accounts, like happened to some prominent people that maybe Twitter disagreed with in the past in terms of what they had to say. So it'll be interesting to see what happens here. And, maybe it could be viewed as positive, that maybe more people will feel that they're included with Twitter and buy into the stock now, or maybe the opposite. You have to read the articles, right? And see what they tell you and see how you feel about it. But there's the information loaded right for you, and you can load more articles. They come in the order that they're time-stamped. And we can go back and we can look at whatever stocks we're interested in trading on and get the most up-to-date information. Very cool feature. I don't think you find a feature like this anyplace else. So we also can look at technical analysis signals that are coming in. And see, as we scroll through, live signals coming in from the analyst views and the featured ideas. And again, these advanced features are in the web trader as well. So, maybe you want to trade on Tesla, maybe you want to trade on Twitter, maybe you want to trade on some other stocks, knowing the sentiment today is so negative, especially on the tech stocks. So maybe if Twitter took a bounce up, or Tesla took a bounce, maybe based on what you view the fundamental news to be today, you think that it's an opportunistic move to get in. I have someone typing no voice. Can you type OK? While I'm tapping on analyst views. Can you type OK if you're hearing me clearly? All right, great. I have enough responses. It looks like we're up and running fine. I'll just type a message for Mohammed. All right, so I tapped on the signal service there that's found in the menu. We clicked on this menu, remember, and I tapped on analyst views. And now we see, what's the view today? USD up against Japanese yen. Okay, makes sense. US dollar we saw was strengthening. Why was it strengthening? Because of all the fear today largely that's going on. And remember, it's fear about interest rate increases maybe coming in the US largely. And what happens to a currency's strength as interest rates go up on that currency? Well, it makes it more expensive to get. So in general, it strengthens the value of the currency. If you raise interest rates, that's the whole point of what they're trying to do, is to stave off inflation by causing the value of the USD to be stronger, thereby bringing prices down, or the rise in prices to slow that down by strengthening the currency. And so increasing interest rates, hawkish statements from the feds in the US make sense that the expectation would have been for the US dollar to climb. So now we're later in the day, right? That's old news. We're probably, when we look on the USD charts, going to see that a lot of that movement has carried out already. Maybe that gives you some opportunistic entry points to go in the opposite direction if you feel that inflation fears will still be there after the knee-jerk reaction today with the US dollar strengthening. So we'll have to take a look at some charts and see. And by the way, if you were interested in following this signal, you tap on it and it brings up the technical analysis. It shows you the zone in which the signal is still good. So as long as it didn't break below this old resistance level, which should be support, we see resistance down, resistance down, resistance down. And this is on 30-minute candles, resistance, resistance, and then finally a breakthrough candle, right? So what they're saying is it broke the resistance, US dollar strengthened today, and so they're saying buy. That's a sign of an uptrend. Okay, and it matches the fundamental news too, that the US dollar broke this resistance. So it makes sense fundamentally and technically to buy here, according to this signal. And so as it goes up, they're saying you could take profit at this level or this level. And you might say, well, why would you take profit at these levels? If you went to say 4-hour candles, 1-day candles, you will see that this is a resistance level somewhere further back in time where it hit and dropped. So these suggested take profit levels are there for a reason. Those price levels weren't just made up. There's technical analysis involved with the exit points that are suggested. Now, what if it reversed and broke below this blue line? What they're saying is then give up on the buy if it breaks below this blue line, and now you should sell. So if the news, one of those headlines hit, like I said, fundamental news, the one type can be unexpected, right? Unscheduled. What if news came that reversed the direction of this? If the Feds all of a sudden said, nah, we're not going to increase interest rates, never mind. Well, then the US dollar would probably weaken. It would break this support level. And what the signal is telling you is if it breaks below this price, 122.90, then the buy position is no good. The preference is to buy long positions as long as it's still above 122.90. If it breaks below this price, the signal says no more buy. The technical analysis no longer says buy if it breaks below this price. Then they're saying that the new signal would be to sell and take profit at these levels. So the way to use these signals, do your fundamental analysis, see if you agree with it first of all, and if you do, then you follow the market move, the first preferred direction with a market move if it's still within the zone that they say it's good for, the price zone, not the time zone. There's no time limit really on it. Is it still above this resistance? And did it reach these price levels yet? If the answer is yes, it's above the resistance, but it didn't make the move yet, then the signal's still good on this preferred direction. And if it matches your fundamental analysis, then perfect. You might go with it. To back that up, in case the fundamental news changes unexpectedly, you could put a pending order down below this blue level as the alternate scenario, which it says alternate scenario. If it drops below that level, then sell with your take profits at the red lines down here. So the way each of these signals is set up is to do a market move and back it up with a pending order. Type OK if you're with me on that. All right, great. I don't see any questions popping up. If I see any, I'll answer them. So we could go through and we could analyze a lot of signals here on the app and place trades here. Let's spend some time. I'm going to leave the sharing of my phone, and let's go ahead and take a look at the web trader, which has all these same features. The web trader has the same features as the app. You just log in here, and when you log in from this location on our website, you find yourself here in the web trader platform. Okay, very similar look and feel as the app because it's designed to be the same. They have the same features, the same functionalities, almost exact. So if you want to find those features we were looking at, here it is, Trading Central, the featured ideas, the analyst views, the market buzz, it's all there for you. And so let's take a look at a couple things. Okay, we saw USD/JPY as one of the signals. It said to buy on. Let's see what happened there. So the dollar yen chart, I'm going to expand it here. We're looking at 15-minute candles. Wow. That signal came out, I don't know, just like a few hours ago. Look what happened in the last, these are 15-minute candles. Let's go to 1-hour candles. Look what happened in the last few hours. Go back 1, 2, 3 hours. Look where this was, down here. So since that signal came out, or shortly thereafter, look at the climb. This is what happens many times when your fundamental news is in agreement with the technical analysis. And so you've got the free technical analysis signals coming into the platform in our app. Do your fundamental analysis, check out the signals that are being recommended and see if they align, see if they agree. And many times you could get a result like this when the fundamentals match the technical analysis signals. Okay, now the question is, okay, great. You showed me a move that I would have made money on or could have made money on, but what do I do next? And so let's look at larger candles. Let's see what's going on here. 4-hour candles. Okay, I see some resistance up here in this area, 124 or a little higher, and the support is down here. Okay, it looks like this could continue to climb if the US dollar is going to be bullish. It's not the greatest entry point, to be honest with you right now, to make a move on it. It's already at a large climb. It's running out of steam a little bit, it looks, as it reaches this resistance level. But to sell on this would be to go against the fundamental news right now. I'm not saying you shouldn't sell, but there might be a better combination if you're looking to short the USD. Specifically, what currency strengthens when oil goes up? If oil is going to get driven up with these sanctions that are going to be increased maybe on Russia, and there's fundamental reason for crude oil maybe to climb back up again after it's pulled down a little today, what currency, which country has the largest percentage of its GDP, not the largest oil output, but the largest percentage of its GDP based on oil? I'll give you a hint, North America. Yeah, Canadian dollar, Canada, exactly. Huge portion of their economy is based on oil exports. So it isn't about the Canadian dollar or Canada producing the most oil in the world. They certainly don't. But their particular economy is based by a large portion based on crude oil, more so than some of the larger oil producing nations from a percent standpoint of economy of GDP. And so rather than trying to guess, will the USD drop back down against the yen, which kind of works against the fundamentals, if you're wanting to short the USD after it had a big climb, maybe we look at USD Canadian, because that might have more reason to potentially pull back. And let me just get rid of this order window so we're looking only at USD Canadian. Let me reload that. It left the old order window with the new chart. Okay, USD Canadian, we've got that in both places now. Okay, so as I look here then at, let's go to maybe 30-minute candles, we see indeed the US dollar climbed up today against the Canadian. After pulling down, US dollar spiked up right here over the last 1, 2, 3, 4, 5, 6, 7, 8 30-minute candles. And so if we then look at, let's go to 1-hour candles, maybe we get a better view. There we can see. If I want to draw a resistance level, I see one here. Okay. Predictably, this rise slowed and started to pull back right here. See this red candle right at this old support level, which is acting currently as resistance. So we had support, up, resistance, down, support, up. Anywhere near here acted as resistance. Down here was support, back up, and then it broke that and came down. Now here's the US dollar climbing back up against the Canadian as oil dropped a bit. But if you view that, hey, crude oil will go back up, and hey, there's still high inflation in the US, and they haven't risen the interest rates a second time yet this year. They're saying they will, but they didn't do it yet. So the strengthening of the US dollar is, a preemptive strengthening for something that didn't happen yet. So if your view is, hey, what is happening right now are supply chain disruptions because of a war that's actually happening right now, then maybe your view is that you think the Canadian dollar could strengthen and pull the US dollar back down. for two reasons. Hyperinflation still exists in the US, which means weak currency, and crude oil prices could climb back up towards the highs that they reached after pulling way back from those highs. And so if that's your view, then you have a fundamental reason why maybe this resistance level could hold. And then you could take advantage of this entry point up here to short the USD Canadian. Okay, I'm not saying you have to do that, but it's something you could do. And by the way, you could protect it with AvaProtect. If you're a little iffy about it, but you want to be able to wait a day or two to see if it comes to fruition, maybe you're afraid it'll spike up through the resistance and then come back down, and you don't want to have it hit your stop loss over the next day and then it goes the right way and you took a loss when you didn't need to, you could use AvaProtect. So very simply, I could say take profit down here at the low that it hit down here. So I could say, all right, where's that low? Was down here at about 124. So I could say take profit 124. Okay. And I won't do a stop loss right now because I'm going to protect it with AvaProtect. And maybe I want to give it a couple days. Could protect by the hour, protect by the day. Okay, so now I could say, well, how much am I willing to risk or pay for this protection in this case on this trade? And I would suggest you should know that before you take a trade, right? So that you know what trade size to put. You should always maybe be aware of your risk preference. And so let's pretend I'm willing to risk, I don't know, 300 on this trade. Okay, fine. So now I'll adjust my trade size. There's half a lot. The protection costs 126. Okay, I can go bigger. One lot. Protection costs 250. Okay, I said 300. 1.25. There, it's a little bit large. 1.2. It's almost exact. Okay, lot size 1.2. With this trade setup, I would make almost 520. It's moving. It's changing by the second because the price is moving. Over 500 potential profit. The cost of the protection is 302. Okay, so that's something that you can do your risk management using these special tools. Not only do you have a special tool like AvaProtect where you can pay a premium and be protected all the way until this expiration time. Any losses are completely covered, paid back to you if any losses during this protected time period, and all the profits are yours for the cost of the premium that you get that special protection. If you preferred not doing the protection and you just wanted to put a stop loss, then you might see this resistance level and say, okay, I'll put it above the resistance up here. Okay, maybe at 124.80. Maybe that's where you think the resistance won't break above. And if that's the case, then I need to put my stop loss on, again, this is a sell. Take profit. 124. Let me slide my line down. 124 even. 124. And stop loss up above the resistance level that we drew, which would be above 124.80. 124.85, let's say. Okay. Now I look and I say, okay, potential profit 41.68, potential loss 26.58. And then if I want to do my lot size, again, if I'm willing to risk 300, now I start to put my trade size until I get to where I have the risk that I prefer. Okay. $1.1, there it is. 294, approximately 300 risk, and my potential profit over 450. That's with the stop loss option instead of using AvaProtect. So you have your options here. Now, the difference here is you don't pay anything up front. With the protection, you pay up front. With the stop loss, you may not end up having to lose anything in the beginning if it goes the right way. And so let's set it up this way. USD Canadian, the risk level all calculated for us. good to go, taking into account the technical analysis, this resistance level here, and going in the direction that you believe the fundamental news maybe makes sense to go. Any questions on that? I see a question that came in while I was presenting there. Ruben, I think we covered that. You asked where would the stop loss be on the alternate scenario, so we went ahead and if you meant by alternate scenario, I think you're talking back when we were looking on the app about the alternate scenario in the technical signal from Trading Central. The stop loss would be on the other side of that blue line. There was a blue line in the signal. If you're doing the alternate scenario, your stop loss then could be above that blue line, meaning once it broke below that support level, if it's a true breakthrough, then it shouldn't go back above. So somewhere above that blue line would make sense to have a stop loss. Just like on the market move on that signal, you had your stop loss below that blue line. Good question. Edgar, yes, you pay up front on the AvaProtect. Whether it wins or loses, you made that payment. So it comes out of your balance immediately. But you have the benefit then of being very patient for the protected time period and not having the situation where it goes up, hits your stop loss, then goes the right way and you miss the movement. So there's pluses and minuses to each strategy, but they both have their benefits. I think AvaProtect works very well as a strategy concept when you expect a lot of volatility, where it could go huge the right way, but you're afraid it could go huge the wrong way first, and then back the right way. So if you think it's kind of unpredictable, you can give yourself the ability to be patient with the movement, even if it goes deep the wrong way, by having the protection there by the hour, by the day, etc. Whereas with a stop loss, the only way to be patient if it's going the wrong way is to move your stop loss further away, which then you keep risking more and more and more. So with high volatility, maybe potential large movement the right way, but also the wrong way, AvaProtect could be an option that might work well for you. Okay, so let's go and take a look maybe at something else that could make sense. Maybe we look at gold. Not Bitcoin gold. Let me slide that down. There's the gold I want. And look at this movement. This was a ranging movement that we had outlined in a prior webinar, and we're on the 1 hour candles. Look at this resistance, down, support, up. Resistance, down, support, up, resistance, down. It broke through once, became support, broke back through, became resistance once again, support back up. It broke below it once, came back above, it became support, resistance, support, resistance, support, resistance, and back down, support. So if you were buying off this line and selling off this line, from what we looked at here, you'd have been right 1, 2, 3, 4, 5 times on the sells. 1, 2, 3, 4, 5, 6, 7, 8 times on the buys. You'd have been wrong because it broke through. Would have hit your stop loss maybe. You'd have been wrong once and twice. Okay, so that would have been a huge win percentage, something like 8 out of 10, or so even better than that, using this ranging movement. Now what we see is gold drop back down and it's starting to bounce off that area again. You have to ask yourself, besides the technical analysis showing that maybe this makes sense to buy, perhaps it'll range back up again. No guarantee it could do this like it did the one time. So maybe a stop loss down here makes sense. If it breaks through, then maybe it keeps going. So you get out if it breaks below here as a strategy. And your take profit somewhere up here. But besides the technicals looking good for buying here, the fundamentals might make sense to you as well. The fundamental analysis on gold right now, what would we think gold should do? Well, the talk about increasing interest rates in the US helped bring gold down. US dollar strengthened, There's the opposite of inflation if interest rates are going to go up. So that makes gold not as attractive as an inflationary safe haven. So US dollar strengthened, down went gold. Now we get to the reality that, okay, we still have hyperinflation in the economy. They didn't raise the interest rates again yet. They just talked about doing it in the future, maybe in the near future. But nothing happened today yet with another interest rate increase. So maybe you look at this and you say, all right, fundamentally, there's reason why gold dropped, but there's also reason why maybe it could be bullish and at least push back up to here because we got more inflationary numbers out of EU and UK today. We looked at the announcements. So there's some fundamental reasons why gold could bounce back up. No guarantee, so you risk manage either with AvaProtect or with a stop loss maybe, or a hedge position down here to trade the other way. It's another concept. So let's simulate a buy position on gold, thinking that maybe this line holds like it has many times in the past, with the one exception, and you buy off of this with a take profit somewhere up at this resistance. Okay, so we put take profit on a buy example. And by the way, I'm on a demo account here, guys. It says live account somewhere on my platform, but it's a fake live account, so that it'll have all the features active on it. But you certainly can be trading on a live account, a demo account, whatever you wish. This take profit then just before the resistance, right? Most of these movements reached near this price level. So right down here, so that we include all of those movements, that all of those would have been a winner if you take profit. 1943, let's say. Okay, so take profit 1943. Stop loss just below this support, so say 1914. 1943 and 1914. So we look and we say, wow, it's a nice ratio. Almost 2 to 1, not quite, almost 2 to 1 possible profit to risk. Let's adjust the trade size so that we're risking the amount we want. Possible loss 150. Remember, I made up a number that 300 was the amount I'm willing to risk per trade. It obviously will be different for you, whatever amount makes sense. So now I adjust my trade size, and there's my possible loss. Just about 300, potential profit 582. And now I take my trade, completely understanding the risk management. Okay? So with the tools that you see here on either our app or the web trader, you can see how easy it is, once you have an idea of the fundamental news and which way you prefer to trade, to then do your technical analysis, have the help with some signals or the news articles through Market Buzz, and then start jumping on the instruments that you feel knowledgeable about and make those trades. And obviously we could look at Tesla, we could look at Twitter, those stocks that had the most buzz on them and the articles. The reason I'm not is we didn't take the time to read those articles. And maybe that's what you should do next. All of you take a look on the Market Buzz, read those Tesla and Twitter articles, look at the charts, look for lines exactly like we're looking at now, and make your moves if you like it, if you like the setups. All right, any questions before we end things this evening? Yeah, Edgar, I would agree. Heavy moving instruments that you feel like you could get a nice hit on, but also it's hard to get your stop loss from with temporary spikes the wrong way from getting hit. Like gold many times can move like that. I've seen gold move $100 an ounce in a single day or even half a day. So yeah, AvaProtect can be a great option for you on something like that. All right, I don't see any more questions popping up, so I guess I must have been pretty clear on what we covered. Good luck with your trading. I think that yet this evening there are a lot of opportunities, like some of the ones we looked at, gold, oil. We didn't even take the time to look at the major indices, look at an index or two. I think you'll find that there were big movements that could also have some large bounces or breakthroughs that might interest you. All right, everybody. Till next time, good luck with your trading. Wishing you lots of profits. Bye for now.